It's Brian Preston, the money guy.
So this is the thing. I think this is a binary decision. We are not one of these financial people, that, personalities out there that says all credit card debt or credit card use is bad.
Right.
I do agree, because there's some people that we think a lot of that are anti all credit cards. Yep. And I completely agree with them. We are consolidated and on the same page that credit card debt is horrible.
Yep.
You should not have any credit card debt. It is official no-go zones, because think about this. The interest rate, the average interest rate. What was funny is when we did show prep on this, I had intern Daniel. I said, I know, because I just did this recently, the average interest rate is 17.3% on credit cards.
Right.
And then Daniel's creating these great, slides now.
Yeah.
And when we went in there and looked at it, I said, 1776. And he goes, yep, they just updated it.
It's gone up.
And then Austin, who's also one of our interns, goes, did you see the number? And I was like, oh my gosh. Only in America is the average interest rate 1776. We just made it through July 4th. And that's horrible. I mean, that really is. If you think about what's punitive is seeing that when people pick on me about a 10% rate of return with the S&P 500, right. But they probably, because I know there's about 70% of the population that will tell you they don't have credit card debt, but they really are carrying balances.
Right.
When you see that they might be paying 17.76%, how do you ever get away from that?
But don't take our word for it, because again, we wanted to actually put numbers to it. We wanted to have some metrics on there. So what we said is that credit card debt is bad. Credit card use is not necessarily bad. That's the line in the sand that we're drawing.
Here's why. Before you pull up the slide on the numbers, I was like, my listenership needs some type of guidance to know what I'm talking about here. And here's what I came up with. Back in the 90s, there was a song that came out by Warren G.
Okay.
Called Regulators.
Mount up.
And it had a quote or a little clip at the beginning from Young Guns. And it was a great quote. I loved it when it was, and that's right. It closed off with Mount Up. But here's what it starts off. It says, "Can't be any geek off the street. Got to be handy with the steel." And here's the thing you need to know about credit card debt. If you're not disciplined, if you're not the best of the best with your money management, you can't use credit cards. Yep. You have to pay credit cards off every month.
Yep.
If you're not good with the steel, it ain't be no geek just off the street. You can't use credit cards. That's what the song, if you want to apply this to the Warren G song and Nate Dogg,
I love it.
We are talking about the fact that not anybody can use credit cards. You have to be the best of the best with your money. I know there's a lot of you guys out there in the Money Guy family. You get it. You can use all the buying resources, the extended warranties, the price match, just the convenience of credit cards. But there's a whole other group of the population, just stay the heck away from it.
That's right.
And let's talk about why you got to stay away if you can't pay it off.
Yeah, so we thought it'd be really interesting to look at an illustration of what this could look like. And so, Brian, we found that the average credit card balance in this country was a little over $6,300.
That's true,
right?
true.
We know that the average annual percentage rate.
A lot of people that have more than that, though. They're looking at $6,300 but I wish my debt was $6,300 because they got $10,000, $20,000, $30,000 of debt.
And we know that the average interest rate is 17.76%. Well, here's what credit cards will allow you to do. They don't make you pay them off monthly. They'll give you the option to pay less than that amount. Mm-hmm. Hey, don't worry. Just give us $25 or 3% of your outstanding balance.
Whichever is greater.
Whichever one's greater. So we said, someone operated under that assumption, and they bought a $6,300 thing, and they put it on a credit card, and they only paid the minimum amount, either $25 or 3%, whichever one's greater. How long would it take for them to pay off that purchase?
I was shocked. But I realized we were nice to the credit card companies because we actually use 3% because that's one of the things guidance the bank rate. I know there's other books out there in the personal finance space that have done the same analysis, but they use 2% as the required minimum payment on their credit card. But you can see using 3% and being generous to the credit card company or to you, the credit card holder, it took almost 15 years. It was 176 months to actually pay off the credit card debt.
That thing that you bought that only should have cost you $6,358 ends up costing you over $12,000 $1,000, almost doubles the price of that purchase.
And if you want to be disgusted, like I said, other financial people have talked about using 2% because there are credit cards that have used 2% as their minimum payments. It would take you over 22 years to pay it off.
So the question is, okay, when does it make sense to prioritize paying off credit card debt? Always.
Always.
If you have high interest, punitive debt, get that knocked out from the gate. A1, start there, get rid of it.
Only people that can use credit cards are regulators that can mount up. If you can't pay off your credit card every month, it's no-go, you can't do it. And here's something just to keep in the back of your mind. When Chris Hogan did that research on millionaires with Dave Ramsey, 73% of millionaires do not have credit card debt. Never had a struggle. And look, we work with a lot of very successful people. How many people that come in as prospects, they're telling us about all their credit card debt?
You just don't see it.
You don't see it.
That's right.
So if you struggle with credit card debt, this is your first probably indication that discipline and just being good with money is a struggle for you. You got to get that financial household order, in order so you can move to the next step of being successful in wealth building.